Yeah.
He actually usually does have the brick one. All right, we are officially live now. So today we have on Rebecca and John, and I love you guys. You guys helped me with the loan on my house. I really appreciate that. But yeah, it's
Yeah.
gonna be a great one today. Just so everyone knows, we're probably gonna be missing out on Chris because Chris is probably somewhere in the middle of the ocean and he's not getting service right now. So I'm not gonna do a market update for you because that's not what I'm good at and that's not what I know. But we're gonna be talking about a mortgage update though with Rebecca and John. So super excited to have you guys, and Tracy and I are gonna be leading it as always for this year now. And Chris is going to be there. We're going to be able to see him, but we won't be able to actually hear from him. But you'll be able to look at that pretty face of his. So, Rebecca, John, thanks for joining us.
Absolutely. Well, no, thank you so much for having us. We're excited to be here. And just a little bit of background. So I'm Rebecca Riley St. Thomas. I've been in mortgage banking for just about 30 years. This is my son and my partner, John St. Thomas, and he's been with me for
about 10 years.
About 10 years, which is really exciting. We've only worked for a mortgage banker my entire career. We currently work for an amazing company called CMG Financial Home Loans. CMG stands for Christopher Matthew George. He's a real person. We are the largest single owner mortgage banker in the entire nation. And if you take out the big banks, we're actually the third largest mortgage servicer, servicing over $100 billion worth of mortgage loans, which is really incredible. Yeah, kind of fun fact and something we're super excited about for 2025 is that Christopher Matthew George, the person, the individual, not our company, but him personally, he's closing on a bank just in the next few weeks. And he is the only individual person in the United States over the past 5-6 years that the Federal Reserve has allowed to purchase a bank. Wow. So we're super excited about that because we're going to be obviously having credit lines that we provide to ourselves. We are known for innovation in the industry. And so, not only are we going to be able to create some amazing jumbo products with some aggressive pricing, but combined with our all-in-one first position home equity line of credit and many other unique products that we have, we're going to be able to really expand our footprint even more in the mortgage space. We are currently ranked number 6 of independent mortgage bankers in the nation. Super proud of that. So lots of exciting stuff for CMG coming up in 2025.
Awesome. That's amazing. And then, so what states are you guys currently in right now?
All 50.
Oh, you guys do all 50.
So our company can originate in all 50 states. We, between Rebecca and I, hold licenses in about 13 states. Cool. One of the nice things is when we acquire the bank eventually, what's nice is we'll be under the FDIC insured blanket. And when that happens, immediately we'll be licensed in all 50 states as originators. So interesting, like if you're an originator for B of A or Chase or any of these places, you don't have to hold independent licenses in each state. So you can just originate across the board. It's probably positive and negative. But by us then being under that blanket, it'll allow us to do business individually in all 50 states.
Okay, very cool. So is that kind of a little bit similar to like a, what's it called? Like a Quicken Loans kind of where it's like they're in all 50 as well?
Yes, I mean, Quicken is an independent mortgage banker we are. They're licensed in all 50 states as a company. I don't know. I mean, maybe you do off the top of your head. Individual loan officers have to hold individual licenses in the respective states.
No, they do.
Work at Quicken. Yeah,
they do.
Okay. I thought they did.
Yeah.
Right.
Yeah. Now, Quicken as a company has a different model in the way that that's all put together.
Right, but they're not considered an FDIC insured bank, and so what happens with their business is that they channel and funnel those loans to the respective loan officers who are licensed in those specific states.
That makes sense.
Yeah,
I get you. Okay, very cool. And then, so what do you guys kind of see for this upcoming year? Obviously, interest rates ticked up a little bit. Do you guys foresee them coming back down? Are you guys kind of feeling some heat right now? And obviously through this first month, or you guys got you thinking it's going to be good? Thinking it's going to be kind of turning around for us?
Yeah, so it's interesting. So I know that Chris usually does the market update, and
exactly.
Just similarly, because we know that Chris, like us, he basically eats, sleeps, drinks, and breathes a 10-year, and that's what we follow as well.
Okay.
So there's a lot of interesting things that are happening. First, I want to say that we are certainly in the most exciting year that we've seen over the past few years. Okay, largely because of what's happened with the election and the inauguration. And we have had, a shift politically in this country, which is amazing, very positive. But what's fascinating to me is that we've had a big change as far as where the volatility in the market is going as it applies to the interest rates. Okay. And so just to give you a little bit of background, as we closed out 24, we were headed into, again, higher interest rates. They went above 7 to about 7.25%. What was interesting about that on a national level, and certainly here even more so on a local level here in the Phoenix market, is that although we were having rising interest rates, we also had stronger sales and continual increase in inventory. And so for our market, it's been strong. What's happened, since the end of the year, and certainly over the past few weeks, we've seen a lot of volatility with interest rates as far as what's happened with the inauguration, with Trump talking a lot about helping housing, about deregulating things for the builders to increase affordable housing, and things like that. Scott Bessent was voted in yesterday, which was a bipartisan vote to be Federal Reserve chairperson, replacing Jerome Powell next year. That's a super positive thing. Okay. I don't think anyone missed wonderful President Trump coming out and talking about how he just wants interest rates to be lower.
Exactly.
Yeah. Although he can't personally mandate that, and he certainly cannot fire Jerome Powell either, which I believe that if he could, he would have fired him day one. But he can't. And so he has to wait for Bessent to come in. And Bessent, as a billionaire hedge fund owner and everything, he's super business friendly, and he's going to do everything he can. So if you ask me a general question, like on the macro level, I'm going to say I think that interest rates have a very positive chance of continuing to go down. The estimations, and we follow a very brilliant lead analyst at Housing Wire named Logan Mohtashami, and his prediction is that rates are going to be anywhere on a low of 5.75% to a high of 7.25%. And we just touched that and really challenged that. I know that Chris is always looking at the 10-year. And so currently today we're at about 4.54%. The prediction is to be anywhere on a low side of 4.7 or high of 4.7 to a low of like 3.8. So we'll see where it goes, but I think that, hopefully we're at the top and we're headed down, to answer your question.
So Rebecca, a lot of buyers are on the sidelines still because they're so focused on what mortgage rates are doing. And what I think, and especially what I got from the presentation by Tina Tambor from the Cromford Report, is that they're reading headlines and then they're going on Facebook and then they're seeing mixed signals of what to do and how to approach it. And is now the time, or should I wait? Should I start shopping now? And one of the takeaways that I really had that I'd love your feedback on is when or if interest rates go down, it's probably going to be buoyed by, well, you probably won't get as much concessions as you have now. They might not be as willing to help you buy down the rate. And so if we're seeing one thing that brings more buyers into the market, it might also be offset by prices starting to rise again. Do you see the same thing? And what is your expectations for buying activity if or when rates do go down this year?
Yeah, no, that's a great question. So I think there's a few things that we want to touch on. And I have some information also from Tina going into the year. So some exciting things that really have happened. And I think that highlights from, if we look back to 23, 24, and where we're starting the year here in 25, we've had the largest increase in inventory that we've seen over the past 2 years. Okay. So a little review here. As we started 23 here in Maricopa County, okay, we're talking about Phoenix only. We started the year at anywhere between 12 to 13,000 units. We went through the year. If we remember, we had our crisis with Silicon Valley Bank. That was quite something. People got very nervous. The rates went up to 8% or a little bit over 8%. The spreads became much wider, okay, and that was not a good thing. But then what happened was between about Halloween and Christmas, what happened was the Federal Reserve started talking about the reduction in interest rates for the calendar year of 24. That immediately spiked our inventory to end the year anywhere between 16 and 17,000 units. So we opened up 24. 24 was exceptional in the respect that we started at 16 to 17. And I was so excited. And, I know that you all know this, but I teach my continuing education classes every single week for you in the real estate community. And so every single class that I start with, let's talk about where the market is, right? And I never ask a question I don't know the answer to. And so I was asking the agents, okay, where's our inventory? Where's our inventory? And week after week, it kept growing. And we went to 18,000, 19,000, we got to 20. And as soon as we got to 19, 20, I was like, oh my gosh, I was like a kid in a candy store. I couldn't even believe it. And I said, this is so significant to our market. So we got to the end of the year at right around 21,000 and we touched 22,000. So if you look at it, we almost doubled our inventory from the beginning of 23 to the end of 24. This has also been something that's been going on nationally, but here in Phoenix, it has had an even more staggering effect because we are only 1 out of 10 states right now in the nation that has gone back to pre-COVID inventory levels, okay? And we know Phoenix, right? We start the party, we end the party. We are the party. Okay?
Always.
We're the petri dish of all things real estate. And we love it. We're right in the middle of the fire, right? Always. And so Tracy, what's interesting is Tina's talked about basically how we currently have our listings are the strongest since 2020. Our current supply of anywhere about 21,000 plus or minus units is the highest entry point for January since 2016 and 2017. Okay, that's huge. The other thing is that our closed sales are up 5.7% to start the year. Okay, that's just to start the year. And we know January is not, huge for the first couple of weeks of the year, but that's the first couple of weeks of the year. So
especially the way the dates fell on this year too.
Right. No, absolutely. So really our inventory for active listings is up 26.4% for the beginning of January year over year. And those are Tina numbers. Okay. So it's really significant. So the other thing that's very important is that as we were closing out the year and we were at that higher 7.25% interest rate, it didn't matter what. And so to go back to your pent up demand of people sitting in the sidelines, people aren't sitting in the sidelines as much as possible or as much as we think they are. What's happening is we're seeing this when they identify that they have the perfect property. And we can talk to you, Tracy, because you do amazing fix and flips. So does Luke. Okay. Yep. We do them, but not at the scale you guys do them. Okay. We try to do a good job, but you guys are the best, right? And what's interesting is you see the person who identifies that they have that fixed up house, okay, and it looks great and everything, right. They're going to buy because they know that that's a unicorn, okay? And so when they see that, they're going to buy. But the other thing is, what's interesting about concessions, and you talk about this, so Tina tracks this, and, of course, I'm such a nerd with all the numbers, 55% of all sellers in Phoenix metropolitan area for the past year, and it was 50% for the previous year, are paying loan and closing costs to the tune of $10,000 or more. Okay.
Wow.
So what's interesting, Tracy, is all 30 years I've done this, I've always seen the Phoenix market pay concessions. So what's interesting is, I think you're right. I think that say you're at the luxury level or just close to $1 million, maybe, you're going to see the concessions decrease a little bit. But when you're in the median sales price, which is currently right around $450,000, we are still going to see sellers pay loan and closing costs, generally speaking. Okay. Right. We have a good market for that.
Well, I think the concessions provided did a lot to help with integrity, right? Because we really haven't seen prices come down. I think a lot of people thought interest rates we were going to watch housing prices just dive.
Right.
And we didn't see housing prices dive at all, right? In fact, we actually watched them kind of stay steady and if not inch up even just slightly. And I think concessions are a part of what helped keep that price integrity, because you can utilize those concessions for things like a 2-1 buy down, which you've probably heard a lot of, because then that helps with one's payment, right? Because ultimately that's the most important thing. Is what is my payment, right?
Exactly.
I can afford a monthly payment, then I can afford the house, is kind of how they think about this. So to your point, if rates come down, it's only going to create further demand. And with more demand is going to create more leverage that sellers have. And so sellers are going to be less likely to give these concessions. But once again, more demand is going to likely create more upward pressure on price, right? So if you have upward pressure on price and we're not getting the seller credits that we were getting prior, that's going to be more troublesome for a buyer than the situation they're in now, right? In terms of being able to get under contract and get a house and then get terms that they want.
Well, yeah, and I think that that's a great point. I think what's interesting is we've seen an addition of seller paid closing costs for the basic closing costs, right? Plus the temporary 2-1 rate buy down. So I think that what's going to happen is, to your point, we're going to see a decrease in maybe the temporary 2-1 rate buy down numbers, because those are substantial numbers and everything. But nevertheless, we still are going to have, the prices are still going to remain strong. And we can see that because, they've been holding tight. And certainly we see multiple offers for the beautiful, when you guys are fixing and flipping and you're putting your primo properties on the market, people are overpaying for those because they know, not all of them, but some of them we've seen people, we just had somebody pay like $30,000 more for a property because they said, hey, it's already done. And you know what? We love it. And so we're like, oh my gosh, they're like, this is our forever home. So $30,000 is nothing to us. We're happy to be in this house. So,
for sure.
Yeah. And that's pricing. What's that?
I was saying, what was your takeaway with all that?
Essentially, so a lot of what it also had to do with that, I really think is worth reiterating, is the price point. Anything above $1 million, which is, considered luxury still at this point, but it's not, it's like $1 million used to be a lot. Now it's like, it's $1 million. It depends on which area of the valley. I tend to play in the entry level and move up price point. I'm not in luxury. Luke is. So I think the feedback from both is really helpful, but I'll also say that it really depends on the condition. So like what I teach my students and what I've always done is a more boutique style output, to where it's like, this doesn't look exactly like other flips. There's a little bit more of a designer touch there. It's cleaner. It's just like more well put together and thoughtful. And people, I like to joke around, when people ask, well, are people still flipping these days and interest rates are high and things have slowed down? Is it still a good time to flip? I'm like, no, people don't want to live in nice houses anymore. That just is only when the market goes up and goes crazy. Actually, arguably, it's even more important now. And it makes us be more professional and better tradesmen at what we're doing, which is putting a really good product out, but also underwriting for these contingencies. Am I going to have to assist, even though I put out a good product, Luke puts out a good product? Am I going to have to underwrite for maybe assistance with a rate buy down or concessions? And if they don't need that, fantastic. We get a little bit more on the upside. But a lot of, to your question, was it depends on the area, it depends on the price point. And so if we're extracting some of that information, it also helps buyers know, like, it's going to be really competitive. If you're in Tempe or Phoenix or certain areas of Scottsdale, like, don't think that you're going to come in and, hey, Mr. Seller, I know that rates are at 7.25 and there's more inventory, so I'm going to get a steal. Good luck with that. You really have to be educated. And that's where I think it is dependent on buyer's agents and the real estate industry at large to give people information to deal with. But what does that mean when people are still emotional about buying houses? It's like we can scream it from the rooftops, but people feel what they feel.
For sure.
And I think people are a little short-sighted in that you can't trade in the price you bought a home for, right? I mean, that's locked in forever, right? But you can trade in the mortgage interest rate. I mean, one of the greatest things about residential mortgage financing is it's a one-way negotiation, and that negotiation's down. Right. If you're fixed at X amount, you never have to go up if you don't want to.
For sure.
If rates go down, great. You can trade it down and trade it down and trade it down. I think people sometimes forget about that, right? Like if you're comfortable, you feel good about this, you can handle it. Awesome. Knowing that in the future, you hopefully can take advantage of it. You're not going to be able to trade in that price of the home that you paid for.
Right. I think something else kind of that you guys had both hit on was talking about the different locations, different markets. Something that we've seen a little bit more of, up in Northern Arizona is that typically Northern Arizona is going to be a little bit more of like a secondary home market, right? So you've got the people from the Valley or from California that are maybe looking for that cabin or whatever it is. That market has definitely slowed down. There's no doubt about it. And so, kind of what we say is that, if there's anyone that's looking for that secondary property or maybe that investment property right now, those are really good markets right now to look in because there's not a ton of demand in those areas right now. And so I think with those interest rates, obviously, just what they are right now, you're seeing more opportunities to pick up properties that, that you wouldn't have seen, in obviously in previous markets. And so, and again, it's the same thing, exactly what you just said, John, the interest rates, okay, whatever, we just locked in at 107.5, but again, wait 6 months or a year or whatever it is, and for those rates to come back down, and then you might have just gotten yourself a steal of a whether it's a secondary home or an investment property.
Yeah, absolutely.
Mm-hmm. So what do you guys recommend? Because all lenders are not created equal, and one of the points of your introduction, I think, again, which is worth revisiting. And I do want to say, now that we're live streaming, we had a second introduction because I jumped the gun. And how ironic, even before Luke jumped in, I'm like, you guys, I've had too much caffeine today. I've been running around. I haven't eaten enough. And then Chris couldn't stream. And I saw where it said, you're on the show. So I started the introduction. And thank you guys so much for being patient. I'm like, newbie podcaster. I'm so sorry.
It was a good warm up.
Yeah. So now that our vocals are warm, we got the jitters out. But part of that, part of my takeaway today that I'd like for you guys to talk about too is, when is the best time to get qualified? Because if buyers are watching where things are going, if they see that maybe interest rates might go down, but prices might keep rising, sure, more inventory is on the market, but what does that really mean for them for buying power? And it's like, again, if we're trying to teeter-totter between interest rates going down, but then less concessions, less rate buy down assistance, that sort of thing, how far in advance, if someone is thinking about even buying 6 or 12 months away from now or in the next few months, like when do they need to start getting pre-qualified, and why is it more important to talk to a broker rather than like who they bank with?
Right. So great question. So I always say this. So as the little Girl Scout and Girl Scout leader that I am, I will say that there is never too early of a time to get pre-qualified. And in fact, what we do is we don't just pre-qualify somebody, we pre-approve them. Okay. And that's a stronger level. We can also get them fully credit approved, ready to go, which also assists. And I'll tell you the benefit to this. And this is what we tell our clients. The more prepared you are, the better chance you have of getting that perfect property, that beautiful property that you want. And so we get everybody completely pre-approved, which means we get their documentation. We run them through the computer-based underwriting system. So that we have a pre-approval. And so when I do, here in Arizona, we're just one of a couple of handfuls of states in the nation that proudly have an Arizona pre-qualification form. I teach a whole 3-hour class on it, did it last week. And we talk about the pre-qualification form being part of the Arizona purchase contract. So what I do is in the middle of it, I will put in additional comments. Buyers are pre-approved, not just pre-qualified. Okay. And I put that through computer-based underwriting, DU, LP, whatever we want to put on there. But the other thing is that adds so much value to it is that we call on every single offer that's put in. Okay. 7 days a week, 24 hours a day. Okay. Like Luke and I had this wonderful experience. Okay. Luke was selling his beautiful home there in the islands. Our buyer did buy it. Okay. They love it. Because again, he did a killer job on this home. It was absolutely perfect, all the bells and whistles. And so it was so cool because I always get excited. I'm like, okay, who's the listing agent? Like, who's on the other side? And so when my agent said, oh, this is who it is, I said, I know Luke, I know who that is. And so I was sitting there in my living room watching the news in the later afternoon, or it was early evening. And I'm like, let me call Luke. So I call Luke and I say, hey, Luke, it's Rebecca, blah, blah, blah. Just want to let you know our clients are completely pre-approved on a scale of 1 to 10. They're like, a billion. They can perform. Can we put this deal together? Blah, 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 whatever. And he's like, oh my God, right on. He's all excited. So
no, it's cool.
Anyway, and that's how we started, because we really want to be able to put our best foot forward. And if we tell people, let's do this, on the outside going in, we're going to have so much more success, and they get excited to do it. And I can tell them that exact story that happened with Luke. I can say, this is what we did. And guess what? We were able to do it because we were totally pre-approved. We had everything. The other thing is that allows us to close in a couple weeks or less. So that's the other thing on the side of a seller. You want to provide as much motivation that you possibly can for them to take your offer. So when you say, I've got pre-approved, we can close in a couple weeks or less, they're like, oh, really? We know the 4-letter word bank. They can't do that. They can't do that, and they won't do that. They don't care. But being a mortgage banker, we can do that. We have the operational ability to do that easily.
Yeah, I mean, the way I like to pose it to people is, we're doing this so that you can get into this home, right? So let's ensure that we do all the things up front so that we complete this transaction, right? Part of the strength of cash is we know it's a certain thing, right? We know definitively, like, here it is. Here's my ability to close. It's right here, right? And it's certain. Well, if we can get all this documentation up front, have gone through some of these processes up front, we are closer and closer to certainty, right? Which is only going to make your offer stand out more. It's only going to make the seller feel better about accepting that offer. And like I said, closing faster. Another thing with cash, right? You can close quick, same type of thing. If we've done all these things and we can, move through the process quicker, make you a stronger buyer. So it's in their interest, because every once in a while, people who are kind of like, you don't need my taxes, you don't need my 1120s, you don't need this or that. And you're like, sure, but then this piece of paper is as good as toilet paper, right?
Yeah.
Goal is to get you into this home and not only get you under contract, but have it go to fruition and get to the end here. If we don't have these items, then I can't necessarily make those promises, which is bad for you. I'll still be in my house, right? But you're not going to be getting in your future house. So
it gives you that short-term happiness where, with people that aren't going to the full steps, because like, oh, we got under contract. But then if the boxes aren't checked at the end, it doesn't really mean anything.
Well, especially Luke, as flippers, I mean, how much do you salivate when you see that someone's pre-approved and they're not having to jump through the hoops that, after all the hard work, because we could be 2, 3, 4 months into a property. And the last thing that we want to do is hope that the LO and the buyer's agent are holding hands enough to have their stuff together and get it across the finish line.
Because as a flipper, we know what that means when it sits on the market for another 60 days. That's 2 more months of hard money, and that's, for flippers, that's not fun. That's not fun at all. But something that I really enjoyed, working with you guys too, is that when like you said, when I got that call, it's just nice. It just gives you confidence in the offer when it comes in. Like when you get that call from the loan officer, and it's like, oh man, like they just said that this person is a very strong buyer. It's it's nice to hear that, because you don't always hear that, or sometimes they are kind of, the loan officer can kind of be or not the loan officer, but the other agent. The other agent can be kind of fishing around and trying to look at looking for specific items that are needed. And your agent on the selling side can ask them as many times as they want, and they're like, oh yeah, we're getting it together, right? And you're just kind of like, okay, well, I have some other people who are interested, and so it's nice. It gives that just nice confidence level right off the bat.
Yeah, absolutely. And the thing too is, we pride ourselves with trying to do just above and beyond service with people. Is that what's really nice is I started this in 2005. When we were, I know, Luke, you were a baby and John was a baby. Okay. So was you.
I think I was in
8th grade.
Yeah, I was, because I'm the wisest one here. Let's just say that, right?
I'm going to borrow that.
Sure.
So we'll go with that. I started when I was 2 though. Right. But what I'll say is I started with it in 2005 because we had so many multiple offers and everything was crazy. And so it was really sobering, because, oh my gosh, we weren't getting as many deals. The competition was fierce. And I said, what can we do to stand out? And for goodness sakes, what can I do to serve my clients in the highest way possible so they have a better chance of getting this offer accepted? And so I started calling 7 days a week, 24 hours a day. I told all my agents, I don't care when you're putting an offer. I want to know, because I won't give you the letter until you're ready. And so I kind of held the letter captive. And then I said, as a strategy, I'm going to call. And so I started calling, and the list agents were so tired because they were getting so many multiple offers, right? That they were like, oh my gosh, somebody called me. Oh, well, this sounds good. It's easier. Let's just make this work. So when I call and I say, hey, we've got a completely pre-approved buyer that can perform we were then getting offers accepted that other people weren't. And I was like, ooh, I like this. I like winning, right? This is a great negotiating edge. And so what I tell the buyers is, again, give me all your paperwork, because guess what? It's not just your wonderful buyer's agent. It's not just Luke who's going to do a killer job for you. But guess what I'm going to do? We're going to call, John and I are going to call 7 days a week, 24 hours a day. And we are going to do everything we can to be part of your team, okay, to get that offer accepted. And they're just like, oh my gosh, you can do that? And they love it.
Well, to answer the other part of your question, Tracy, in regards to like banks, like Wells Fargo or B of A, that's a different model. So what's interesting is like we are very similar to you as like a real estate agent, right? Most of your business is probably referral, people you know in your network, you're talking to and whatnot. And that gives you a certain kind of, I don't know if you want to say responsibility, but you're also like, you know, I'm going to hold myself to a certain standard because I know this person. Like I'm eating across the dinner table from them. I need to make sure this deal goes well. And that's how things are in our business too. I mean, we're 98% referral based. Whereas if you go to a large bank like Wells or Chase, one of the allures for people is there's such a huge conglomerate entity that stuff just comes in the door.
Your numbers.
So they don't, they don't lead generate or do any of that kind of stuff. It's just a number that comes in. They look at it and pass it down the line. And so it's like a 9 to 5, Monday through Friday, just pass it down and, you know, it'll figure itself out. Whereas, you know, we generally have a relationship, say with Luke refers us that person. We're the one dealing with that person the entire time. You know, it's our reputation on the line, stuff like that. Our individual license, stuff like that. So, you know, we have this kind of fiduciary responsibility, but also just from your namesake of like, we need to ensure that this goes the way it needs to go.
Reputationally.
Because you know, Luke doesn't get paid. We don't get paid. They're not happy if these things don't happen. Right. So it's just a different level of kind of service. And honestly, if we're really being honest, the big banks don't want to do mortgages. The only reason they do them is because so much business comes in the door.
Yeah.
They can't turn it in.
Yeah.
Well,
so go ahead, Lee.
Tracy.
I was just gonna say we're right at that 30-minute mark, and I think that this is a great ending point, Luke, if that's cool with you too. Guys, we've touched on what's going on in the market, when to get pre-approved, and how to approach a seller with a strong pre-approval letter, and why it's important to work with a local, wise, experienced lender. How do people reach you?
So my phone number, I always give my phone number, 602-326-9606. And we also have our Instagram, John and Rebecca
Mortgage on Instagram. My number is 480-241-8600. Then we have our emails, Rebecca RST at CMG Home Loans, and John ST at CMG Home Loans.
Okay, I got one of them. That's the correct number, correct? 241-8600.
Yeah, 480-241. Yeah.
And
sounds like a business number.
Rebecca, what was your phone number again?
602-326-9606.
Perfect. All right. Oh, press the wrong button. There we go. Awesome. Well, yeah, we appreciate you guys jumping on with us. We'll do this. We'll do this another time for sure.
Absolutely. Good. Yeah. Well, then we'll see you guys at the next RIA. So we're excited about that next month.
And maybe next time we'll be privileged with Chris.
And I promise not to start the meeting before it starts.
Absolutely.
Awesome. Well, thanks so much, guys. We'll be talking soon.
Absolutely. Have a great day.
Have a great day, guys.
All right. Bye now.